You're listening to the Cash Flow Academy podcast with Andy Tanner, your source for investing made easy. Here's Andy Tanner.
Welcome to the Cash Flow Academy podcast. I'm your host, Andy Tanner, where we do our very best to make investing simple. And right now, the world is not simple. We have conflicts in Ukraine. We have an invasion with Russia moving in. We really have our eye on China, seeing what they're going to do. And it's just a very interesting time in history where things are not status quo at all. And I can't think of a better guest. I have to give a shout out to my producers for the ability to schedule just the best people at the best times. We have James Falk, who is in Hong Kong, so he's joining us on the other side of the world. So that's a nice time zone change. And I usually don't spend a lot of time, as regular listeners know, introducing people, but I'm actually going to read a lot of his bio because it's very important to know and understand and see the credibility of who's going to be speaking with us. James Falk is a veteran financial and strategic advisor to corporations and governments. He served as senior executive at Hong Kong Exchanges and Clearing, the HKEX, from 2012 until 2021. This is a period of rapid internationalism in China's capital markets, and while there, he played a major role in a number of landmark financial markets initiatives, including the launch of the Shanghai Hong Kong Stock Connect program, Bond Connect, and the Hong Kong markets listing reforms. Prior to the HKEX, Mr. Falk worked as an investment banker in both Europe and Asia, specializing in the financial sector, written and spoken extensively on the intersection of geopolitics and international finance. And he serves on a number of advisory bodies, including Ireland for Finance's Industry Advisory Committee, the Executive Board of the National Securities Service Association, and the Financial Services Advisory Committee of Hong Kong, and Development Council, and he's a member of the advisory board of the HEX Trust. Educated in London in Oriental and African Studies, has a wife, and like me, has two sons. That's a mouthful. I could barely even pronounce all that stuff. Mr. Falk, thank you for joining us. I can't wait to dive into this conversation.
Thanks, Andy. Please call me James. And thanks for that very kind introduction.
He is the author of The Financial Cold War, a view of Sino-U.S. relations from the financial markets, and his website is jamesafalk.com. And James, I've had a chance to dive into this book, and first of all, my compliments. Extraordinary, like the historical narrative behind the dollar from Bretton Woods on up to where we are now, the insight of the present. I think having historical narrative and building that into where we are today gives us a great understanding of where we are. And I will just tell people that rarely do I do encore reading. I will read a book and glean from it, take my notes, and move on to the next topic. There are certain books I read, and this is one that I will actually study. We will do encore reading with this for sure and underline it, because there's a density of information here that just impressed me. So I will blatantly do a commercial right now for your book for everyone. Go to Amazon.com and purchase this. And I'll set a little context if I can before the first question, James. A lot of people want financial advice. They say, I want a stock pick. And their mindset is, give me a tip. Should I buy crypto right now? Should I buy real estate right now? Give me a stock pick. And what I've learned in my imperfect efforts as an investor, as a student over 30 years, is that the biggest thing I want to know before I delve into any asset is, are we going to have inflation or deflation? Is my own currency that I operate in going to be more valuable or less valuable? To me, that's the foundation of everything. If I can see inflation coming, that tide tends to lift a lot of boats. If I see deflation coming, that tide going out sinks a lot of boats. And so before people decide to invest in a real estate or crypto or whatever, understanding the dynamics of the value of a currency is fundamental. It is where I begin. And in reading your book, I just think this is like I don't know if a word of primer would be a good idea. It's just a wonderful place for someone who doesn't understand currency to start. And so let's start here. After World War II, we have the Bretton Woods Agreement, where all of a sudden the world somehow decides to make the U.S. currency, the currency in which we exchange. Would you talk about that important event? Because I really believe that's a good beginning for where we're going to start. Could you teach people about Bretton Woods just very briefly?
The Bretton Woods actually emerged out of the Great Depression, and frankly, before Bretton Woods, there'd been a century of sterling standard around the world, which was backed by gold. And the whole system basically depended on the amount of gold you had to back your currency. And the whole flaw in the system was that as trade and as investment around the world grew, the supply of gold just wasn't able to keep up with the pace of that growth. And so it led to this liquidity crunch, which was a major cause of the Great Depression. And so coming out of the Second World War, the victors in that war decided that it was critical to put in place a system to replace it. Now, the system that replaced it with a dollar standard, and that was founded in the fact that by the end of the Second World War, the US accounted for over half of the global economy, and it was the most powerful nation on earth with the most powerful currency on earth. But that system at Bretton Woods was still, they still couldn't leave gold behind at that point. So it created a system where all other currencies' exchange rates were referenced to dollar with a basically fixed exchange rate where the dollar was tied to gold. And so that system eventually broke down because over time, the amount of dollars that were created just vastly exceeded the amount of gold that the US actually had. But the problem that it created was that in order to supply the rest of the world with the fuel that helps support international trade and investment, it required the US to keep supplying more and more dollars to the rest of the world, which meant, in other words, the US had to run this balance of payments deficit. And that worked really okay for quite a long time. But the fact is that required the US economy to be growing at least as fast a pace as the rest of the world, because otherwise the US was going to go into greater and greater levels of debt relative to the size of its economy. And what you've seen now, 80 years after Bretton Woods, is that actually for many years now, the rest of the world or other countries have been growing much faster than the US, because the US has been a big, mature economy for a long time. And the result of this system is that the US has had to go into higher and higher levels of debt to support this dollar-based system, which has created a fundamental fragility at the center of the US financial system. And because the US dollar is the main currency of trade and investment around the world, it's created this huge fragility in the global financial system.
It is so interesting because in that 27 years between Bretton Woods in 1944 and 71, where Nixon pulls the dollar from the gold standard, and you talk a little bit about this in your book, the inroads and the infiltration of how the dollar is part of the structure of the economy was a big. The prosperity of the U.S. in that time created huge exports for other countries. They were dependent on U.S. consumers. You talked really interesting about two fronts of the battle. I thought this was a great insight where you have the U.S. and other countries vying for advantage, but you also had an internal class war. You quoted Warren Buffett in your book by saying, "Hey, there was a class war, and the people on my side have won it." And so all of these things, control of the Panama Canal, control of the way actual commodities get shipped around the world, the U.S. got put in an extremely powerful position. So in 1971, when they said, "Well, the whole reason you were the world's reserve currency was because of gold," well, now we're not going to do that anymore. Why wouldn't the world just say, "Well, fine, you're no longer the world's currency"? Well, this infiltration and the structure of it was so dependent on the dollar that it tended to continue for a while. Is that a fair assessment?
That's a fair assessment. I mean, between Bretton Woods and Nixon taking the dollar off the gold standard, the US dollar became incredibly entrenched. And actually, in the context of what's happening today with the sanctions that have been put on Russia, this is quite ironic, because actually one of the major drivers of the creation of this US dollar entrenchment was the creation of the Eurodollar market. This is the offshore market in US dollars. And one of the major drivers for that being created was that in the midst of the Cold War, Russia was holding these dollars, and they had originally had them sitting in US banks.
Yeah.
And they said, right, okay, well, what if the US puts sanctions on us and freezes our dollar accounts? This is going to mess up our economy or mess up our ability to trade. So they took the dollars and put them into European banks outside the purview of US regulators. And that was really the origins of this Eurodollar market, which powered the US dollar's entrenchment in the global financial system.
It is interesting. We also have the idea of a PetroDollar, and oil makes the world go round. If one of the reasons this war can be inflationary is every business is going to have things shipped to them on raw materials on a boat, train, plane, or truck. And they're going to build what they're going to build, and they're going to ship it out to their customers on a boat, plane, train, or truck. And so when you see the price of oil go up, extremely inflationary because everybody still uses oil. Well, a huge amount of the U.S. oil is purchased primarily in U.S. dollars around the world. And after you write about this as well in your book, when we had the great financial crisis, the meltdown in 2008, that was bad policy, it was greed, it was all those things. But it really made the world look at the U.S. and say, why are we using U.S. dollars? Why, this is fragile. And so China has made moves. I remember even I was in Tokyo, and they had an English newspaper, thank heaven. I was able to read it. They're saying, we're not excited about U.S. dollars either. You wrote a piece recently in the Wall Street Journal where the Saudis, and this would be big, the Saudis are thinking about saying, hey, why don't we accept some of this Chinese currency to pay for oil? Could you talk a little bit about how the idea of oil being purchased in U.S. dollars and the idea that crypto is much cheaper? I mean, you can transfer a lot of money in cryptocurrency, much less expensive than you can convert to dollars. Could you speak to those two things, the idea of the petrodollar right now and Chinese currency, an electronic digital China Yuan?
Look, I think going back to this arrangement with the Saudis, oil had emerged, it was the US that originally built the oil industry, Standard Oil, etc., and trading in oil around the world had already been in dollars. The big move happened in the 1970s after the US came off the gold standard, when there was an oil embargo and there was massive inflation in not just oil prices, but in pretty much everything at the time. And at that time, the US struck a deal with Saudi Arabia, who suddenly had all these PetroDollars, these huge surpluses that they needed to invest. And the US Treasury Secretary at the time, William Simon, who was an ex-bond trader or ex-bond salesman, basically went to the Saudis and struck a deal with them whereby the US would buy their oil and Saudi Arabia would buy US treasuries that would help keep the US government funded.
Yeah.
And the implicit deal there was that the US, in the midst of the Cold War, would provide this security umbrella to Saudi Arabia.
And they have not done, and the Saudis aren't happy with that right now, correct? They're not happy with the US how they're fulfilling that agreement, yes?
Well, the whole basis of the deal has completely changed, because with the discovery of shale oil technology, the US is no longer, in the 1970s, the US was short oil. And so they had to protect the Saudis because this was the major source of oil for the US economy.
Right.
But what's happened in the intervening period is that because of the technological breakthroughs that has allowed the US to tap these previously untappable reserves, the US now is in a position of being an energy surplus country again, whereas the Chinese from 1993 onwards have been a net oil importer. So what's been happening actually in the last 20 years has been kind of weird, because actually the US has been spending huge amounts of money and a huge amount of resources providing this security umbrella over the Middle East. But the largest benefit of that has been really for China, because it's not the US that's been needing that oil, it's been China that's been the major importer of oil from the Middle East. And so I think what's happening right now is that, markets kind of can be irrational for quite a long time, and, a lot of it's due to kind of old muscle memory. Well, this is a place where kind of US national policy and defense policy was really working to the old muscle memory that was developed under a very different scenario. And I think this is now the point of reality catching up. And so from the perspective of Saudi Arabia, the largest customer is China.
Yeah.
And although the US is still the provider of the security guarantee over the Middle East, Saudi Arabia is naturally having to gravitate closer to their largest customer. And the question now is going to be over a number of things. The big one being that what is Saudi Arabia going to do with the proceeds of that export revenue to China? And in the past, they've been putting it into largely US treasuries. One of the big impediments for Saudi Arabia to shift to accepting renminbi payment for their oil was that actually there just isn't there aren't that many Chinese renminbi-denominated securities available for them to buy in international markets.
Mm-hmm.
So there just hasn't been the stock there. And one of the other fears that a lot of, not just Saudi, but a lot of large reserve holders has been that if they had to go and invest in the onshore market in China, then the system by which those investments are governed, the legal system, the regulations are all Chinese. And for a long time there was a huge lack of faith in the integrity of the rule of law and the integrity of the regulatory environment in China, which inhibited people from putting large amounts of money into China. What's happened now is that they've realized, and I think this has been made abundantly clear by the sanctions that have been put on Russia, is that actually in the old days, the whole offshore dollar market was governed by or operated under bearer securities. So, really nobody really knew where they were or who held them, etc. But nowadays that's entirely transparent to the regulators, to the governments. And so whereas in this anonymous market that previously has existed, everyone investing it was safe from the long arm of the US government. That's no longer the case. It's actually no longer been the case for quite a number of years, but it's taken the jolt of Russia's foreign exchange reserves getting frozen for everyone to wake up and realize. And the other thing that's happened is that although China in some ways still has a long way to go, they've worked very hard over the last 20, 30 years to improve their domestic capital markets, to improve their systems of laws and regulations. And so, although there's still a gap, the gap is now much more narrow. And so it is perhaps now dawned on the Saudis that maybe this is the time that we need to start thinking about diversifying. And the major other question, in addition to the investability of Chinese securities, is going to be whether China is willing to offer the Middle East and Saudi Arabia in particular the same US security or the same security umbrella that the US has provided for all these decades.
That's
very unclear.
Yeah, it puts China in a very interesting position of power, because the U.S., like you say, it's been about guns, and they've been able to offer security. Now Russia's reaching out to China saying, "Hey, will you help us?" That puts China in a really interesting position, because if they decide to back people militarily, it changes their position in the world drastically, and it accelerates the Cold War. If there's a Cold War between U.S. and China, that accelerates that, because they're going to be a bigger, stronger player in the world. They have to tread carefully, but they're certainly in a position of power. Yes.
Well, it's the superpower's burden.
Yeah, exactly. You phrased that perfectly.
And the US has borne an extremely high cost for almost a century in playing this role. Because if you think about it from the perspective of the ordinary man in the street in the United States, although a lot of people look at the position of the US dollar as an exorbitant privilege that benefits the US at the expense of other countries, the reality is that actually how that's fallen has really depended on where you sit in US society. So, as trade and investment has grown around the world. The whole world economy and production lines have globalized. What's happened is that this demand internationally for the US currency has denied the US the natural adjustment mechanisms of currencies. Because normally when another economy is growing faster and their productivity is growing faster, you'd expect their currency to go up relative to the dollar. But because actually all this trade and all this investment is happening in US dollars and all these central banks are holding US dollars as reserves, it's created this demand for US dollars that actually hasn't allowed the dollar to adjust in the normal way that currencies adjust. And so how this has affected you in the US really depends on who you are. So if you've been the wealthy shareholder of a large US corporation, you've been able to, and the corporation's been able to outsource its production to lower cost centers with undervalued currencies, you've done really well because the cost base has come down, the profit margin's gone up, your share price has gone up. But unfortunately, what's happened over the last 40 years is that if you've been a US manufacturing worker, you've paid a really high price for this.
You phrased this very well. I'm going to try to phrase again in the way that I see it as a context. If a person has sought dollars, the dollars because of the expansion of the money supply naturally, even the Federal Reserve has inflation goals of 2%, which they've overshot. But if you're a person who is seeking dollars, you're losing. And if you're a person that is seeking assets, you're winning. A lot of people get up in the morning and they go to work and they say, I'm going to go put in some time to get these dollars. So they're actually seeking something that is losing value constantly. The investor goes out in the morning and says, I actually want to get rid of my dollars. I want to trade these dollars for assets that are priced in dollars. And that's why I come back to everyone. I said, the first thing to know is if your dollar's losing value, you don't want them. If your dollar's gaining value, you want them. If you see deflation, you want dollars. You want dollars. If you see inflation, you want assets. And that really has been a context for the person who wants to become wealthy, understanding what you just said. Am I going to be a manufacturer that is seeking dollars, or am I going to be an investor that wants to get rid of dollars and have assets? Has been the central thing that would divide you from the haves and have-nots, as that wealth gap, that chasm has just become wider and wider based on a person's philosophy of how they've gone about their day.
That's a great way of explaining it.
To me, what bothers me is in the school system, they don't teach that. They say, go to school, get a job, go work, whether it's a doctor, whether it's a white collar thing or a blue collar, it doesn't matter. You're still seeking the wrong thing. You're seeking dollars instead of seeking assets. Now, let's talk about this. First of all, is the system as is sustainable? And I ask that in two ways. Is it sustainable in terms of other countries tolerating it and wanting to change it? Number one, or is it, and is also sustainable just in the idea, you talk about the superpowers burden, we have $30 trillion we've loaned out in the US, or that we've borrowed. We've borrowed $30 trillion, but we've promised another $168 trillion in programs. So you've got a GDP of north of maybe 20, 23, 24-ish GDP, but you've got a $30 trillion obligation in debt and a $168 trillion obligation in promises, for a total of just shy of $200 trillion owed on balance sheet and off balance sheet. So those are two things. Is the rate of printing money sustainable, and is the toleration of this system by other countries sustainable? Where do you see it going?
Well, I think the one critical thing to understand, because we all kind of think about money as this thing that has value that we try and accumulate, etc. But the reality is, if you look at money, currency, all it is it's got no fundamental value. All it is a tool for organizing society, and specifically it's a tool that helps provide this mechanism to allocate society's resources. And so,
could I interject right there? And I don't want to interrupt you, but this is an important thing, because I've had I won't say I've changed my mindset, but I'm more broad in how I see this. There was a time where money was feathers. There's a time where money was maybe some stones or whatever, and for a long time we said money is gold. And there's a lot of the gold bugs. My grandfather was a gold bug. I guess I'm a bit of a gold bug, just of how I was raised. I have some gold. But a lot of people in 1971 said, well, the dollar is no longer money because gold is money, so therefore the dollar is no longer money. And I used to say, yeah, that's right. This is just paper now. There's part of me that's saying, just like the feather is no longer money, that in 1971, perhaps the opposite is true, that gold is no longer money, because gold is heavy, it's hard to take around, you can put it in and use, like you said, the whole problem is the growth of economy can't be limited by the amount of gold we can mine. That's a constraint. And part of me thinks cryptocurrency is now money. Cryptocurrency, really, if you look at the currency supply of the United States, all a dollar is a credit on a ledger. It's like a basketball game where you give people points writing them down, right? And so could you speak to that before I didn't mean to interrupt you, but when you say, well, money is just a way to organize society so we can transact, that would mean the most valuable way to transact. In other words, the best and cleanest and most energy efficient and the greenest and the most liquid and easiest way to transact, whatever we come up with, that's going to be money, and it's going to beat out any other thing that's less efficient. Would you? Is that crazy?
It's a great question, and I guess one of the ways you can think about it is money's whatever you believe it is. It's whatever the currency that the guy in the grocery store will accept, and my employer will pay me for my labor, and if they meet, then that's great.
That's money.
And so it can be feathers, it can be bits of gold, it can be bits on a computer screen, it can be anything. I think the one thing that fiat currencies, this is the paper money that is printed by the Federal Reserve. The one advantage that it has is that that there are only two certainties in life: death and taxes. Yeah. And the U.S. federal government demands that your taxes be paid in US dollars. And so at some point, whatever you're doing, even if you're transacting in feathers, if you're making a profit, the US government is going to want to take its share.
This is how Warren Mosler explains MMT, right? Warren Mosler says, look, I got a guy out, my business card's worthless, but I got a guy out there with a 9mm, and unless you have one of my business cards, you're going to get shot, right? It's the taxes. Look, you're going to go to prison unless you give us these. And if we want dollars, if we want gold, if we want feathers. So the ability to create currency and then tax it really creates a powerful system. But is that sustainable? I'll go back to I interrupted you for answering the first question. The sustainability around the world, is this going to stay? Well,
I think that there are really two ways of looking at this. One is that if you understand money as just being a tool for organizing society, the question ultimately is the system governing society, is the whole system sustainable?
Yeah.
And that ultimately depends on kind of how balanced that allocation of society's resources is. And unfortunately, when you have ever widening levels of wealth and income inequality, at some point the people that have nots, if they become too numerous in number, they're going to rise up and overturn the entire basis of society. This is how revolutions and wars come about.
Yep. This is how people say, well, capitalism's evil. Look what it's doing. We've got to get rid of that. I mean, they'll say, look, we need to have more equality, and they're going to do that by fighting against the capitalist system. Yeah.
I don't think that capitalism is inherently good or evil. It's just a system, and actually it's an incredibly efficient system, but it's not perfect.
Mm-hmm.
And the one thing that's really happened over the last 40 years is that, you know, in the old days there was people paid very high taxes. They didn't like that, but you know, those tax dollars went to fund education. They went to fund, you know, government research and development, all the scientific discoveries that have powered our growth. And there was a very distinct shift in the 1980s to this kind of free market ideology. And that was great because it frees up markets, and markets are efficient. It drove growth very powerfully for quite a long time. But at some point that breaks down, because actually, if you take it to the full circle, ultimately wealth compounds over time. I mean, and actually, the way that the capitalist system works is that we like to think it's meritocratic, but actually it allocates resources on the basis of your ability to pay. So if one group of people have a disproportionate amount of the currency, and you know, are able to grab a disproportionate share of resources, then ultimately, you know, you're going to have some sort of overturn in society, which is basically what happened in Russia in 1915.
Well, and you talk about the ability to pay. You've gone from maybe a cash society to a debt society because of that. Because if I can finance and if I can borrow, I have the ability to pay. So your debt is going to explode. And it's almost like if debt were to be a derivative of cash, money supply and inflation would be a derivative of debt. In other words, we used to say, oh, I'm worried about not having enough money in my bank account. Oh, I'm worried that I can't pay my bills. Well, now I'll just borrow as much as I want, but I'm worried that my currency will deflate. So we've almost moved from cash to debt to what we're really trying to control isn't the debt. We'll borrow everything we want. We're just trying to control the value of the currency now, right?
Yeah, and so we've kind of ended up with a system that is, I mean, ultimately, you asked me whether it was sustainable. I think, unfortunately, if we continue on this path of ever rising levels of wealth and inequality, it's not going to be sustainable, because ultimately the whole basis of society is going to get overturned. I think the other thing to think about is really the whole system of our economy, and this is something that actually in historical terms is quite recent. It's really been over the last 100 years, which is this consumerism. And you know, I think consumerism is great. I mean, I love the technology, the iPhone.
I have a lot of nice things.
all the really nice things. But the thing is that actually what's happened, and this goes to your point about this credit-based economy, is that in the past, your value as a human individual in the economic system was based on your ability to produce and innovate and add to the economic production in some way. Actually, that hasn't been the case for quite a long time. I mean, it's still the case up to a point, but actually this whole consumer society that we've developed really looks at individuals not as producers but as consumers. Yeah. And so actually you're more valuable to the economy for your ability to consume and spend lots of money and buy lots of nice things rather than your fundamental ability to innovate and produce and add to society in the more traditional ways. And I think that is something which, if you think about where we are today, if you look at most developed economies, modern societies are not having as many babies as in our parents' day and our grandparents' day.
Japan comes to mind, yeah.
Japan is exactly the example. And so when you've got a whole basis of your economy and basis of society that depends on ever-growing consumption, the underlying assumption is that you've got ever-growing populations. So actually, it's great that you mentioned Japan. I was an exchange student in Kyoto.
Really?
In I think it was 1996, and I had an allowance from my parents, but and it was okay. But Japan wasn't. It'd come off the peak, but it was still a really expensive place. It was a nosebleed expensive place to be. And I worked out that if I wanted to have some beer money to go out at the weekends, I could basically afford to eat one meal a day.
Oh my gosh.
So it was amazing. I went to this, I used to go every day at lunchtime to this Ukrainian restaurant near the school. And because not because they had good food, but because they did large portions. It was really stodgy food. You filled your belly, and that would get you through the day. You go back to Japan. We live in Hong Kong. Japan's fairly close to us. In fact, we have my wife and I have a home in the countryside in Japan. And you go to Tokyo now, it is one of the most affordable tier 1 cities in the world to visit. You go to Japan. I don't. You might remember this in back in the 1980s. The Imperial Palace grounds in Tokyo. This is this big square in the middle of Tokyo. Was valued at more than all the land in California.
Unbelievable.
But you go to Japan, you go to parts of Japan today, in rural Japan, their population size is shrinking, their population's aging. In parts of the countryside in Japan, they can't even give away houses.
And it's partly cultural and partly policy in who can own land there. And it's very traditional, right? I mean, they have a lot of culture there that says, look, if you want to own land here, you're going to be Japanese. They're not really an immigration state that I know of. They're not really welcoming other people. So if you're not going to have children, you're not going to have immigration, you get upside down in your demographics.
But what Japan is showing us is actually the future of most developed economies, because actually if you look across Europe now, they do have immigration, but actually most European countries are seeing their populations aging and shrinking. And the United States actually, the one huge superpower of the United States is that it has this uncanny ability to attract and absorb immigrants. And that's kept U.S. population stable and even growing a little bit. But if you look around most of the rest of the world, and China, because not only is their population of baby boomers aging, but they've also had this one-child policy for a very long time. The speed of aging in China is just on steroids. I mean, it's 3 times as fast as the Western world and Japan. And so when you look at that, if you have shrinking populations and your populations are aging, retired people don't spend as much money as people who are working and earning. Then the whole basis on which our economic system and our society is going to break down. And the one big problem we saw in the global financial crisis in 2008, that the ill effects of building up too much consumer debt, and fueling that consumption with debt. The banks were bailed out. They changed a lot of regulations and laws and so forth. And they've made the financial system a bit more secure than it was. But actually, what we still haven't found is a new basis for organizing our society and our economy. And when you ask me the question about sustainability, we still haven't. Clearly, the system that we've got now is unsustainable, but we haven't yet worked out as a society, as a species, what is the system that is going to replace it? People talk about, we're going to replace human workers with robots, and we're going to pay people universal basic income. Maybe that'll work, but I'm not so sure. It's a radical change in our society, and the reality is that societies live on broadly what you'd call some sort of a social contract, and part of that social contract traditionally has been that you go to work and you contribute in some sort of way, and a lot of people's purpose in life and their identities are tied up in them being useful contributors to society.
What's your name and what do you do? You so and so passed away. Well, what did he die of? Well, I don't know, but he was a postman when he was alive. I mean, we define ourselves in how we earn money. He was a postman, he was a computer tech, whatever he was. Let's talk about dogmatism for a while. One of the things that I've tried to do in my life as I've gotten older is to be less dogmatic. I think as human beings, we want security, we want sustainability, we want foundations that we don't want to build on quicksand. And yet, as technology changes and as things innovate, I've found myself saying, Andy, it is a requirement for you to be open to new dynamics because change is a constant, if I could say it that way. And to say, well, this is gold, or this is money, or this is how it should be, or this is it. I think the guy that throws that out the window and goes to Amazon.com and picks up the financial Cold War and starts learning about things and is open to what could be has an advantage. How do you feel about that? For the average guy listening here, I would say one of the beginnings you have is in this brave new world or new world orders or whatever you want to call it, is to really be willing to let go of one rung on the ladder in order to grab onto the new, because there'll be a lot of Galileo moments where we discover, well, maybe we're not in a geocentric world, maybe we're in a heliocentric world, and we got to change our opinions. Your thoughts on that? Have you changed yours? As you've been in this thing longer than I have. How have you changed in how you see the world working financially, based on what you've watched?
I find myself changing one mistake at a time. I mean,
that's well phrased.
But really, I mean, you live and you learn. And my Chinese grandfather, who he had his university studies interrupted. When the Japanese invaded Hong Kong, he suddenly found himself fighting in the Second World War. And one of the things that he passed on to me was that the one thing, all the money, all the assets, all these things, all these accoutrements around us can be taken away. The one thing that nobody can ever take away from you is your education. And so stuff's constantly changing. I learn stuff from my kids because, I mean, the world that they've grown into, I mean, when I was a kid, we didn't have iPhones and iPads and virtual reality and all this stuff. And I'm watching this world that they're growing up in. It's so different.
Supersonic. Yeah.
And so you're exactly right. I mean, the thing is that the world around us is always changing, and we can't stay in any fixed mindset. We need to constantly keep learning and adapting to keep up.
There are so many more things I'd like to talk about, but you've been so gracious with your time, especially considering the time zones that we're in the opposite sides of the world. Just let's finish up with this. Your thoughts on Russia and Ukraine, the sanctions, and I know you don't have a crystal ball. How long does it take sanctions like that to squeeze Russia? Will it? Where do you see the conflict in Ukraine going, and where the U.S., China, and Russia come together in this?
What's going on in the Ukraine right now is an absolute tragedy for everyone involved, even including the Russians. And the financial sanctions, they don't tend to have an immediate effect. Financial sanctions are a slow burn tactic or strategy, and they take quite a long time because they rely on the gradual build-up of pressure on the target to force them to change their behavior. But financial sanctions on Russia will have a huge cost to other parts of the world. We've already seen oil prices jumping. That's going to lead to inflation. It's going to cost you more every time you fill up your tank. Mm-hmm. And that means that you're going to have less to spend on other things, and that's going to have a knock-on effect on your ability to buy other stuff, consume other services, which is going to affect other people's jobs and livelihoods. And so whether or not they're effective really depends on how much pain the world is willing to put up with to keep them in effect.
And it doesn't seem like Europe, they're so energy dependent that to put a sanction on Russian energy really throws their economies, their inflation. I mean, it's tough to hurt someone you're tied to, right? When you're that connected to someone, you go to cut off their arm and you're cutting off your own as well. That's their dilemma.
And that actually is the whole message of my book, which is, we've seen, unfortunately, in recent years, this build-up of tensions and conflict between China and the US. Mm-hmm. In the end of the day, we're all living on the same planet. And in this globally interconnected world and systems of trade and investment, ultimately each of our interests lies in each other's economic and social well-being. And so, when you pursue trade wars, when you pursue these types of actions, it is ultimately self-defeating and futile, because it hurts us all. The far better solution is to look at really what are the root causes of these tensions and pressures, and try and work together to find ways of fixing the underlying problems so that these tensions can gradually be de-escalated.
Human beings, I often think of the duality of a human being. There's a civil part of us and there's a primal part of us. We have different parts of our brain. Our limbic system very primal. Our prefrontal cortex would like to be civil. And, you and I go down the street and actually bump into each other. Sorry, my fault, very civil. But when resources become scarce, there's one sandwich and three families, you can go to primal pretty quickly. And so whether or not the leaders of the world can embrace civility or the primal nature of greed and the things that I liked what you said, that capitalism is neither good or bad. It's probably the idea of people and how they participate in it. If you're greedy, if you're dishonest, those are the things that really put a flaw in some of that stuff. It's a person's heart. You've been incredibly gracious with your time. I can't thank you enough. It's been absolutely fantastic conversation. And I will just say, I often tell people, if you have the chance to take, James to dinner, you'd probably pick up the tab just to be able to learn from him for an hour. And for much, much less, you can learn a lot more in his book. It's a fantastic opportunity. Go to Amazon.com and read about the financial Cold War. Read about the history, the historical narrative where we are today. And above all, if you're going to invest, we want to have an idea of whether the dollar's in trouble or whether it is not. And if the dollar's in trouble, that means inflation, and that changes how we position ourselves drastically. So any final words for just the average guy on the street? Why should someone, this is stuff for fancy guys in the Hong Kong exchange. They're for they're for nut students like Andy that care about this stuff. Why should the average person in the electorate or the average person on the street learn more about money and about financial Cold War?
This is something that affects each and every one of our lives. It affects our families, our children. And part of the reason I wrote it was because I've been in the position of being close to a lot of top policymakers and decision makers. And actually, a lot of these issues are not as well understood, even at that level, as you would hope they were. And I wrote this book actually not entirely with those guys in mind, but in my mind, is my mum, who's got absolutely no interest in finance, is my wife, who doesn't really care about finance. Are they going to read it and enjoy it and understand the issues? And if I've been successful in conveying the message to them, then maybe it gives each and every person the tools and the knowledge with which they can, pressure their own political representatives to act in the interests of broader society and humanity as a whole.
One of the precious assets, I've got assets like gold and stocks and a little bit of real estate and business. One of my assets, I think, is my library. And one of the things I hope I can give to listeners is insight on what I'm reading and what I'm interested in, and share that with you. And hopefully you're building a library. I'll tell you, the financial Cold War, a view of Sino-U.S. relations from the financial markets, pick it up. Mentioning your comment on wanting this to be a read that someone who's not maybe a wonky Wall Street person or an economist, extremely easy read. I mean, very easy, very simplistic for someone who's been on the front line in a very complex world. This is a very easy read. And so again, I recommend this with full endorsement. It's a fantastic book. We've been speaking with James Falk from Hong Kong. Fantastic insight on the relations, the geopolitical and also financial relations between the U.S., China, the Saudis, Russia, all of these pieces. It's a great time to learn right now because the future's uncertain. And as you said, the education is going to be the big key. Perhaps that's the new money, is how much you know is going to give you the weaponry to move forward and fight your own battle. You've been listening to the Cash Flow Academy podcast. I'm your host, Andy Tanner. This is where we do our very best to make investing simple. We'll see you next time.
You've been listening to the Cash Flow Academy podcast with Andy Tanner. For more information on investing made easy, go to thecashflowacademy.com.